We're joined by Tony Ciero, Vice President and Senior Portfolio Manager at Caldwell Securities. Great to see you once again, Tony.
You as well, Andrew. Thank you.
So our guest told us today we're dealing with just a fire hose of announcements from the White House. So it is hard to figure out what's going to happen in the near term.
Absolutely. It could also lead into, on top of the things that you just mentioned, you know, the U.S. markets have done quite well, and we've seen quite a bit of growth, and we believe it's still sustainable going forward. And these are just slight hiccups you'll see, potentially buying opportunities. But you're also starting to see a little bit of sentiment shift in towards European equities and emerging markets. And one area in particular is technology, Chinese technology, really taking hold over the last couple of weeks. It started with DeepSeek's R1 model.
Yeah.
You know, combating now ChatGPT's capabilities at a lower cost. And we had the earnings report out of Alibaba yesterday, out of Hong Kong.
Yeah.
And you see that stock up 15% in Hong Kong, and just strong sales. A lot higher than what the wildest sales targets were out there. And that could be driving a little bit of pressure here back home in the U.S. Canada and the U.S.
Let's have a look at Baba in U.S. trading. And Jack Ma, of course, the head honcho of that company, apparently back in favor with Xi Jinping, the Chinese leader.
Yes, yeah, and that helps. So you're going to see a little bit more support there. And that's why we believe potentially Chinese technology, you're hearing some analysts out there almost saying over the next couple of years, you can see Chinese technology rival the NASDAQ over what they did over the last couple of years. I think last year, NASDAQ returned 30%, and in 2023, returned closer to 40%. Now, if there's that potential growth coming out of Chinese technology, you know that's going to be backed by the government as something to hold on to.
Wow, that's a new battleground between America and China, AI.
Yeah, absolutely. But you can kind of see there is a little bit more congruencies there between China and the U.S., so we can see a little bit of competition. But could there be a way to help each other out? You never know with technology advancements.
Yeah.
In the U.S., we continue like Amazon and Microsoft. And as you know, those are predicated. We like that because of their AI capabilities.
Those are two of your favorites.
Yes, their cloud computing platform. And in the U.S., those two companies in particular are spending a lot of money on R&D in terms of the energy needed to house this. They're building more storage warehouses for this as well. So they're spending quite a bit. And in China, they're claiming that we don't have to spend as much. And that's why the stocks here are under pressure. Amazon, Microsoft are under pressure.
On the big CapEx bill.
Exactly. So, but we see it as buying opportunity. Long term, we believe the cost will be justified, and we'll see growth in those sectors here.
Maybe we could pop up Microsoft and Amazon. Amazon, yeah, I guess they'll get even cleverer at what they show us when we log on, when we put in a query, what they'll try to sell us to make the most money.
Well, Amazon is down about 3% today, 4% on the news of Alibaba's great earnings reports.
That's interesting.
But Amazon also surpassed Walmart in quarterly revenues. And Walmart had the distinction of holding 12 years in a row quarterly revenues, highest quarterly revenues for a retail sales platform. So Amazon just surpassed that. There's growth there. And remember, Amazon, the biggest deal is their e-commerce platform. That's the biggest revenue driver for them. And
but their cloud is their biggest profit source, I thought.
But now, yes, exactly. They're building up this cloud capabilities vis-a-vis the AWS system, Amazon Web Services.
Right.
And we believe the cost would be justified to continue ramping that up. And who knows what will lead in 2, 3, 4 years once all these costs. You're doing something with these costs, you know, R&D development. So hopefully we see the price pop up because of that. We see Amazon as a buying opportunity right now.
For people who'd like to diversify out of North America with part of their money, the Vanguard developed ex-North America ETF, VIU in Toronto, you think could be a candidate?
Yes, and why go ETF? Because it might be hard to, pick stocks out of Europe, given the research that we have available here, and B, there won't be too many firms supporting trading in different currencies out there. So why not go with VIU, a Vanguard ETF? Low cost, MERs are below 30 basis points, so you're not paying a lot for it. But you also get exposure to Germany, Japan, and those are two areas we believe can start seeing the tide shift there. Germany or Europe in general, over the last few years, there's been stemmed growth The tariffs have now just added to that.
Yeah.
But potentially we can see a little bit of shift of tide there.
Oh, okay. And then just finally, an emerging markets idea, potential VEE, the Vanguard FTSE Emerging Markets.
Yeah, another ETF by Vanguard, very inexpensive to buy, about 30 basis points. I think it's even lower than that. And you get exposure to emerging markets. When you look at emerging markets, you have to start with Chinese markets, China. And again, as I mentioned before, we can see potentially a tide shift into Chinese technology, and you'll get exposure to that vis-a-vis this ETF.